Welcome back, it's JWalter here. If you missed my previous video, I shared a report from Redfin that showed that home buyer demand may be softening because mortgage rates have been spiking so greatly lately. In addition, in that report, they stated that home sellers are starting to drop their asking prices more so than last year. So with that said, let's go ahead and dive right into the video, and I have a lot of data to share with you guys regarding home prices, listing prices, housing inventory, and much more. And of course, if you get any value out of this video, then please hit the like button and share with your friends, with anyone you feel may benefit from this video. Anyways, let's go ahead and dive right in the video. So here is the latest stats from Redfin. They actually just posted this today, which is the 7th of April. So here are the key housing market takeaways for 400 plus US metros, and this is for the 4-week period ending April 3rd. And here's a very brief disclaimer for you guys. So for these stats I'm sharing with you today, if they have anything to do with a house that has already sold, that's really a lagging indicator. In other words, that really means what the housing market was approximately 30 days ago when the home seller accepted an offer from a home buyer. So that's a lagging indicator, and one of those things, of course, would be the median sold price. And the median home sold price was up 16% year over year to a new all-time record high of $384,500. Again, that's a lagging indicator. That's just really what the market was like approximately 30 days ago. Meanwhile, the median asking price of newly listed houses increased 15% year over year to just under $400,000. And the monthly mortgage payment on the median asking price of a house rose to a new all-time record high of $2,245 per month at the current 4.72% mortgage rate. Right now, mortgage rates are in the range of closer to 5% right now. So, and again, I believe when they release this new report in about a week, we'll see another all-time record high for this metric here. And this was actually up 32% from 1 year ago because mortgage rates at that time were only 3.13%. And of course, home prices were much less as well. So here's a couple more stats I want to share with you guys, and I'm going to be sharing some visuals for you guys that'll be really easy to see the changes here in all these stats here. Pending home sales were actually up 0.1% compared to 1 year ago. I have some interesting stats to share regarding that. And the number of new listings were actually down 4% compared to 1 year ago. And active listings, which is another word for housing inventory, were down 22% compared to 1 year ago, but are slowly inching up from the record low levels we saw in February. So here's a key stat I want to share with you guys because pending home sales were slightly up, let's just say basically flat compared to 1 year ago, even though the total number of houses available for sale were down 22% compared to the prior year. And when I share some graphics with you guys here in just a little bit, it'll be really easy to visualize this stat here. Meanwhile, approximately 59% of houses that went under contract that had an accepted offer within the first 2 weeks hit an all-time high. That was up from 55% from a year ago. In addition, houses that went under contract within 1 week also reached an all-time record high, up 42% from the same time period 1 year ago. Again, both of these are lagging indicators as well. All right, so here's some graphics I want to share with you guys. So here's a median sold price, again, up 16.4% compared to a year ago. The median sold price is $384,000. 1 year ago, it was approximately $330,000. And in 2020, it was just over $280,000. So a big increase since this pandemic has started. And here's a graphic depiction showing the median asking price of newly listed houses for sale. And again, this is a 4-week rolling average. As you can see here, the median asking price, again, this is the asking price that home seller asked for their house for sale, has shot up greatly so far this year, but has started to level off over the past several weeks. This is also something we saw in 2021, this blue line here, where the asking prices shot up greatly through March. And then starting in really mid-March, they started to level out. They increased a little bit during the summer months, went down again, and then increased again in September and October. I believe that was because mortgage rates decreased to almost all-time record lows in August. So that caused maybe potentially a lot of home sellers asked more for their houses because we were seeing more home buyer demand during the fall months of last year. In any case, we'll have to see if this trend continues to slow down or if it increases throughout the year. Time will tell. Here's a really good graphic depiction showing home buyer mortgage payments. Those have increased 31.8% year over year. The way they calculate this figure here is based on the median asking price of a house in the US, and also, of course, due to mortgage rates at the time. So as you can see here, home buyer mortgage payments shot up ever since the beginning of the year to reach all-time record highs, far above what we saw in 2021, where home payments were less than $1,750. Now we're at $2,245 on average for the home in the US. There's a very interesting graphic that I want to share with you guys, because this is one stat that I want to share with you because it shows how home buyer demand is still very strong right now, because pending home sales are actually up 0.1% year over year. For the 4 weeks ending April 3rd, there was 66,189 pending home sales in the US. So the reason why this is so significant is that look at this, how 2021 basically mimics 2022. So more or less, we have just as many pending home sales right now compared to this time last year. And the reason why this is so significant is that look at the number of active listings or housing supply compared to a year ago. So the total number of houses available for sale compared to 1 year ago, we're down 21.6%. So we only have 482,000 houses for sale. 1 year ago, we had over 600,000 houses for sale. So it's pretty remarkable to see we have almost as many pending home sales, or actually slightly more pending home sales, even though we have 21.6% less houses available for sale. Meanwhile, new listings, which is when a home seller lists their house for sale, is down 4.2% year over year. This is moving in the opposite direction that we want it to, because we want new listings to shoot up, because we need, of course, a lot more houses to be listed for sale in order to balance out this crazy housing market we have right now. In any case, right now we have about 88,758 houses that were listed for sale over the past 4 weeks. And that's actually less than 2021 by 4.2%. And like I mentioned before, about 6 out of every 10 pending home sales went under contract within 2 weeks. That's an all-time record high, and also above 2021, we had approximately 55% of houses that went under contract within 2 weeks. Also, 45% of pending home sales went under contract within 1 week. That's also an all-time record high and slightly above the levels we had in 2021. We'll have to see if this trend continues to increase or if it's going to decrease or even level out. I'm guessing that we're going to be seeing this decrease or level out because of spiking mortgage rates are causing some home buyers to put their plans on hold. So here's another lagging indicator. Here's days on the market. This is the time when a home seller lists their house for sale and the time it took to when they accept an offer from a home buyer. So on average, or the median days on the market, I should say, is 19 days. Compared to 2021, it was approximately 27 days. And of course, 2020 was just over 40 days when we had, during this time, COVID lockdowns. In addition, approximately 52% of houses sold above their listing price over the past 4 weeks. And then compared that to 2021, we had just over 40%. So right now, houses are selling on average over their asking price. But again, this is a lagging indicator. So here's probably the most important graphic that I want to share with you guys today. And it says 3% of listings had price drops. Again, this is a very small amount, and that means that 97% of the houses that sold did not decrease their asking price, and a lot of them sold for over their asking price. But still, we're seeing this increasing in this trend, though, because the 2022 is this red line here. 3%. We're actually above levels in 2020 and 2021. So 2021 is this blue line here. So at this time last year, we had approximately 2.2% of the listings had price drops. Now it's at 3%. And we're seeing here really ever since March, this has been increasing greatly, and we did not see that last year. Last year it increased a little bit and then started to level out. So we'll have to see if this trend continues again, because again, these are short-term trends, so we'll have to see if they would become long-term trends before we make some long-term estimates about our housing market. Meanwhile, home sellers sold their houses for 2.1% over their asking price on average over the past 4 weeks. That's much higher than 2021 during this time. During this time in 2021, it was less than 100.5%. And again, in 2020, it was less than 100%, meaning on average, home sellers during this time in 2020 were selling their houses for less than their asking price on average. Changing gears slightly, I want to share a survey that was done by Redfin. In this survey, they found affordability is the #1 factor keeping renters from becoming homeowners. In addition to that, debt is the most common financial obstacle to home buying, according to the survey here, with 45% of renters saying it has kept them from trying to buy a house. On top of this, nearly 1/3 or 32% of renters nationwide rent because they cannot afford to buy a house where they want to live, while 30% are unable to save for a down payment. Those were the most commonly cited reasons for renting rather than owning a home in a March Redfin survey. And by the way, this was a survey of 1,500 US residents who currently rent the house they live in, or they are looking for a rental house to move into. So again, affordability is a number one factor stopping renters from buying a house. They asked this question: why do you currently rent your home rather than own? Number one reason by 32%: can't afford to own a home where they want to live. 30% said they can't save for the down payment for a home. And 20% actually said my rent is a really good deal and buying would be a lot more expensive. And Redfin chief economist had this to say: a lot of American renters want to buy a house, but they're stuck renting because it's simply too expensive to break into the housing market. That's especially true since they're often competing against investors or other deep-pocketed individual buyers. She went on to say the following. I thought this was actually a really good quote here. Mortgage rates are rising fast, which is a double-edged sword. Higher rates mean higher monthly mortgage payments, but they will also eventually ease competition for houses, making it so fewer houses sell above their asking price. He went on to say in this report that the housing market is unaffordable for many first-time home buyers, and houses are 34% more expensive than they were before this pandemic started, and would-be buyers have half as many houses to choose from. Obviously, we saw that in the stats there because we have far less houses available for sale compared to last year and also in years past as well, and near record lows as well. The caveat to this is that US rental prices are also soaring. The average monthly asking rent was up 15% year over year in February to $1,901 per month. So as I mentioned, debt is the most common financial obstacle that's keeping renters from buying a house. Nearly 45% of US renters saying debt from credit cards, student loans, medical bills, car loans, etc. has kept them from buying a house. So they asked this question in the survey: have any of the following financial obstacles kept you from trying to buy a house? Select any that apply. So number one, of course, is debt by 45%. 44% said home prices are too high in the areas I was interested in. 38% said an obstacle was having enough income to save, and also low credit scores was also at 35% of the respondents. Here are their most common reasons for people wanting to move. 29% said they want to upgrade to a better house. 20% said they want to be in an area with lower rent, and 18% said they want a lower cost of living. Interesting enough, only 11% said their landlord is selling, and only 6% are moving because their landlord is terminating their lease. And it summarizes this report by saying the following: with rental prices up so much over the past year, one of the only ways to get around rising rental costs is move to a more affordable area. I'm personally seeing that in Sacramento as well, because we get a lot of people who are moving from more expensive areas like in New York City, the Bay Area in California, for example, who want to move to the greater Sacramento area because oftentimes they can buy a house and their housing payment is a lot less than what they were paying for rent, and also a much bigger house they're able to afford as well. In any case, that's what we're seeing in our area. If you got any value out of today's video, then please hit the like button. I greatly appreciate it. Hope you have an awesome day and look forward to seeing you on the next video.